Good morning, good morning, good morning, good morning, good morning, good morning. Welcome to the ASX Speed webinar, and please let me know whether it's working for you. I will send you a very special message shortly, and it will be from YouTube, just in case. G'day, Sue, how are you? Just in case the video doesn't come properly and good. We will see what happens. I'll send you that now just in case. I'm told that there's still some sort of bubble up. So welcome to the ASX Shares webinar for 23rd of September 2019. Here's our disclaimer and warning. And we have short-term bear pause warnings in the following Australian shares, including AMP, Amp Me Up, ANZ, BHP, Boral, CBA, NAB, you can read this, all ORG, Qantas, QBE, Rio, STO, Tabcorp, and Westpac. Now, my belief system is as follows. And I better wait so I can show this into okay, these are bear pause warnings. Bear pause warnings. Bear pause warnings. It's my belief that BHP, Rio, and Fortescue and the other miners are going to strike some trouble. And it's my belief that they deserve to strike some trouble because the share price of at least the Chinese iron ore prices have been going down. And they should take a hit, those particular stocks. We can see that most of the banks are on long-term or on short-term bear pause warnings. And as a result of this, the index that we do know, the index likes to top at the end of September and early October in Australia. So we now are on notice, despite lower interest rates, for a correction of some sort. I don't know what magnitude, but there's something brewing at the moment. We see housing prices going berserk at the moment because of lower interest rates and alleged affordability. This is all rubbish, in my opinion. Just to be sure, we have no short-term bull horns warning stocks. So cycle-wise and bear pause warnings-wise, we have reason not to be excited about this stock market. When we look at the charts later, we'll see a retest of the highs. And so we will reduce by 1% on our self-managed super funds across the board today. Now we have about 64 million stocks on wedgies. Well, not quite, but there's a fair few. And this may counterbalance some of the things as people decide the big stocks are expensive and move into the smaller cap stocks that usually appear in the wedgies more than any of the larger ones. Full stop, new line. The larger ones that I can see would be Fortescue and Oz Minerals and Bank of Queensland. We'll have a look at them later if you like. I don't know why I'm seeing about the Super BTOL that has just come up and replaced everything. That is really weird. That is so strange what just came up. Seems to have wiped out everything that I've done. Yes, it has. It's wiped out everything I just did, this little puppy. That's disturbing. Just a second while I fix this. Had it all nicely up there. So at the moment we have probably a switch. So at the moment, I would believe there would be a switch from the larger cap stocks to the smaller cap stocks over the next couple of weeks, maybe just this week. This will be a sign of a top, and we should prepare for a correction of some magnitude, and I'm not sure which level or degree though. So today we will reduce our self-managed super funds exposures by 1%. The All Ordinaries Index, we can see, has done a bigger retracement than usual, and we are celebrating with a nice party and some promotion of Anthony Pratt's paper business in Ohio, full stop, your line. That is one thing about Trump, is that when he wants to pour love on somebody, he really does. When he wants to attack them back after being criticizing, he attacks them back. When you look at his tweets, they are all generally quite positive unless they're incredibly negative. But he is out promoting business, which is a good thing. Whether it's a good thing promoting Scott Morrison is another question in my mind, but it only cost Australia $150 million to get a White House dinner that probably cost $5 million to put on. We can see lurking in the distance 70.34 if this market does not hold up, full stop, my line. I would really love to see a decent triangle in this preceding price action. I can see a little bit of a rectangle, but not a triangle. So the reality is it's trying. I think it's at risk, but it hasn't fallen yet. Full stop, your line. The XJO.ASX, we can see it got to just a few points above where I said it should have, which is 6 points. So we're now on notice that if it starts to break down below 6,700, we'll think about 66.30 and 65.40. Two years ago, the banks was told to stop lending to people, and that it was too expensive to buy property, and that people were at risk of losing their bottoms in the property market by buying at such high prices. Today, we are told housing affordability has never been better, and that prices of those properties are almost the same as they were back in the tops of 2017. Does this make any sense to you? Question mark. This should not make any sense to you. It certainly doesn't make any sense to me. We are told now that the banks are lending money hand over fist, and we've seen the banks go up to a double top, full stop, my line. At this point in price action, I can see a little rectangle in the preceding price action. I'd like to see a triangle. Maybe Yeah, it looks like a triangle. So if this breaks back down through 64.40 or 64.20, then it's in trouble on the financials, and the Australian index in general is in trouble, full stop, Muline. At the moment, it's still trending up, so we need signs of reversal, but it certainly feels like the timing is close and the price action is close with a double top for a reversal. ANZ still has not broken up on the monthly charts. On the weekly charts, 28.35 is the target area. And have a stop loss at 27.44. Now, in order to get up to that 28.34, it really needs to break through $28.15, which isn't all that far. We can see a little bit of selling volume coming in on this topping area. So the risk is a breakdown below $27.67 in terms of ANZ. CBA. The monthly charts show $84.36 as being a target and having a stop loss at $78.90. There is no new news in that, what I've just said. The dailies show good volume on the upside after a nice washout after paying its, sorry. The weekly charts show good volume on the upside after a nice washout after paying its dividends. The daily charts are giving us a little bit of a struggle street pattern. I'm still not convinced, but we're close to the end of the move on this move up, which has been a good move. We are close to the end of the move up in this one, which has been a good move. Volume is supportive still, so there could be something more towards the $84 area. At the moment, worry if it breaks $80.58. On the investors time frame, look for $32 and have a stop loss at $27.60 for National Australia Bank. It still feels like the better one, and that could be because it doesn't really lend as much in terms of home loans to retail compared to the other ones. NAB on the weekly time frame, looking for $30.13, but more so the little bit above there at $30.66, and then the bigger target at $31.92. Currently, if long, stop loss should be at $28.31. Okay. NAB is doing well. Look at that increasing volume. At the moment, it's the star stock of the banks. The best stop loss, if long, would be at $29.26. Westpac on the traders time frame is forming a triangle which will target towards $30.26. So if you've got to back a bank, it's Westpac or NAB in the opposite order, full stop, new line. Currently, you can have a stop loss at $29.38 and buy dips down to $29.21 and $28.92. The materials index looks for 13,721 on the top side and having a stop loss at $13,400. My suspicion is that this will not last up here. Particularly in the iron ore sectors. BHP on the monthly chart has rallied, but has had an inside month so far. We're getting near the end of it, so it's got to make its move. A break below $34 is negative, looking for $28 on the downside. While sillier things have happened, I think if individuals are buying this, they need a really weak Australian dollar. On the intermediate time frame, we see a target at $40.19 has been unmet. We see a price gap which should be filled today or tomorrow. We could see a pullback down to $36. That would be reasonable. I could see $31.53 or $31.43 in a decent correction. Now, what we should see is whoever bought it at $39.34 on the open last Monday should be able to commit suicide at some point over the next week or so. Or be shot. By their spouse, significant other, or boss for doing something stupid. Full stop, new line. The retracement area, if it's a dip, should be down to $36.23. If you wish to buy BHP, then that's the area to go lurking. Rio on the daily charts is marking out a bit of a triangle. It's probably worthwhile buying down to $89.71, hoping for $98.22 on the top side. If you buy it, have a stop loss below $89.50. On the intermediate time frame, a break above $96 is smart, and you should have a stop loss at $89.43. The monthly charts still show the possibility of $80.69 and $75.75. Fortescue has been doing some retesting. I kind of think it's fading a bit. I thought it might be a bit stronger. So at the moment, be cautious of it. On the intermediate time frame, a target at $9.34 has not quite been met, but it's been rejected on a bit of volume. Probably should come back down to $8.57. On the traders time frame, we can see a little bit of a topping, a little bit of hesitation, and probably down towards $8.43. Would be a normal correction. The energies index has a triple top. We probably should look for 10,400 or 10,525 on the downside. Pick an energy stock. If you can't do one, we'll do ORG. Let's do ORG because most people don't talk energies unless I say I've picked another one. So ORG. On the investors time frame, look for $8.65 on the top side. It's kind of trying to get along, not greatly, but it's just playing some Fibonacci ping pong. If it clears through $9, then we go for the next Fibonacci sequence at $11.66. Full stop your line. If you're long, stop is at $7.10. The weekly charts don't promise so much. We see a little bit of selling pressure on a double top. If you are long, stop is at $7.63. On the traders time frame, we see a 50% retracement on the bigger thing. If you're long, have a stop loss at $7.77. And weird combination of price action here. Look at the volume going up as price has been kind of going sideways. Strange. Cindy has pointed out that the gold index has been going up. And looking for 8,124. It has intercepted the old bottom, so I think that you're in the right company if you are buying some gold stocks, despite the fact that the gold price could still go down a bit. The other thing that Cindy has pointed out is that there are plenty of gold stocks in the wedgies. Any gold stocks questions? Okay, no more questions. BGL.ASX, Bellevue Gold. The overall pattern looks as if it is a top already and probably should go down to 45 cents. Full stop, new line. The first sign of this really changing longer term is above 68 cents. We're looking for 76 cents. If you bought it, your stop loss would be below 56 cents. On the intermediate time frame, we'd look for 67 cents if it pops above 66 cents. So that's no real big excitement. You would have a stop loss at 58 cents. On the trader's time frame, buy a break above 66 cents, looking for 68 cents with a stop loss below 60 cents. SAR.ASX Saracen. On the investors time frame, it still doesn't feel as if it's complete on its correction to the downside to $2.94, full stop, new line. So there's probably better stocks than this to play with. And even if you bought it, you might only expect $4 or $4.14. Intermediate time frame, it's struggling with that $3.60 overhead resistance area to $3.77. So the rally is probably limited in its scope, full stop, new line. If you are long, have a stop loss below $3.36. On the trader's time frame, we can see why it stopped here. And if long, have a stop loss at $3.39 or at worst $3.25, looking for $2.87 on the downside should it break. Silver Lake. Silver Lake has declined and it's kind of, I would imagine it still can come down to 78 cents, full stop, new line, before going up towards $1.59. The weekly charts say probably back up to $1.15 or $1.20 if it rallies, full stop, new line. Stop loss if buying would be below 90 cents. I see some volume jumped up last week, which is good with an inside week. The first trigger for buying would be a break above $1.05. Buy a break above $1.05, targeting $1.11 or $1.17. Your stop loss would be at 97 cents, and I think this is kind of a low probability trade, but it's worthwhile pointing out. So this would be the one to have a look at if you are trying to buy something. The healthcare index is doing a weird thing. It's kind of pushing up and then coming back to close around the same area. The healthcare index is coming up and then pushing back down to close in the same area, which is a little bit strange. Worry about it if it breaks 35,400. It's possibly just reacting to a weaker Australian dollar against the US. Full stop, new line. Pick a healthcare stock. I don't think we had any on the wedgies, did we? Healthcare, 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 healthcare. Can't see any healthcare. No. Any healthcares? Let's, for fun, look at RMD. RMD.ASX ResMed. We see a bit of a stall for the monthly charts on ResMed, and next month it will be a challenge if it breaks $18, but at the moment I can't see that happening. There's some reasonable divergence, however. On the intermediate time frame, look for $20.07 on the top side should it rally. Full stop, new line. Breakdown is below $19. That's where your stop loss should be. Full stop, new line. It's kind of struggling a bit, a lot different to what it used to be in the way up. And we could say the fifth wave is near the end of the line. On the traders time frame, we see again choppy, sloppy. There's been a big gap down. I don't know why that is. Maybe that's the Aussie dollar, but a break below $19 sees $17.66 and $17.98. I am very curious about this index. As you can see, it's done a 38.2% retracement, but on the previous goes to the downside, it ratioed out very nicely. The fact is, it's probably better buying at 1573 and 1571, given all of those two scenarios. Full stop, new line. And not only that, probably 1538. The property market is just too strong, and I don't think we'll see the Reserve Bank being keen to lower interest rates. Pick a property stock. What have we got on the list here? We got any property up there? Rural funds might be considered property, but it's in trouble. SCG. S Center. S Center. Longer term, this still looks down to $3.40 to complete a corrective phase. That's where the investors should be looking. On the intermediate time frame, we see $3.77 on the downside as being available proposition at if it breaks down below $3.90. If it breaks down below $3.90. Is it Westfield? I thought that was Unibail. Ah, okay. Thank you. I didn't know the difference. I just thought it was Unibail, which was weird. It's a weird stock. Going down while exchange rates for Australian is going down doesn't make sense to me. But anyway. Now looking down towards $3.88 on this descending triangle on the trader's time frame, and below $3.85, then expect $3.71. The telecoms index has had its head pop up. And then get pushed down a little bit. So maybe expect down towards 1280. I can still expect it towards 1351 or 1334. Sorry, Charles, I didn't do yours. Can you just remind me in the other section? There's a couple of questions. I was about to get to it and I didn't quite. Telecom stocks. Telecom stocks. Let's do MNF. My net phone. MNF.ASX, my net phone group. This is doing pretty well, and it's doing pretty well on pretty good volume. So buy dips down to as low as $4.84, looking for $5.50 with a stop loss below $4.64. The target at $5.50 is supported by the daily charts, and you can buy weekly charts, and you can buy dips down to $4.85 with a stop loss below $4.77. On the traders time frame, we can see a re-rating, a break up above $5.10 with a stop loss below $4.90, targets for $5.30. On the small ordinaries index, I think this is getting better as the bigger stocks become overpriced. The small ordinaries index needs to fulfill its pointer of telling us when the top is in by rallying towards 3016, maybe 3000. Small and mid-cap stocks questions. BKY.ASX. No more questions, thank you. There's plenty, no more questions. Might be here for about 7 weeks. I said no more questions. I don't think LYC is a lithium stock, Sue. Berkeley, I don't know how you say it, it's funny spelling. Yeah, it's rare. It is rare earth. It's not lithium. Whatever rare earths mean, there's all sorts of different rare earths, I'm told. And Howard would tell you, rare earths are not particularly rare. We see a nice correction in Berkeley. And getting above 40 cents would look towards 63 cents. If you bought it, stop loss should be below 19 cents. On the intermediate time frame, unfortunately, we just see a 38.2% retracement. So breaking down below 23 cents is negative, and look for 11 cents. We can see this does not have much fun most of the time. It's a very low spec, low volume stock, and it doesn't take much for the volume to pick up, Cindy, which you'll notice, full stop, new line. So the basic thing I would believe is a close above 29 cents would look for 34 cents, but at the moment, don't fall in love. CHC.ASX. Charter Hall Group. Glenn says, Howard believes really, the rare earths are rarely mined, but they still need them for screens and touch screens and all that sort of stuff, I believe. Now, Charter Hall has the big outside range bar, and I think I looked at this before and told you that there should be some confusing churning price action. And that's what appears to have happened in the lower time frames, full stop new line. So expect maybe up to $12.20 and then down to $11, full stop new line. Look for $12.02 on the top side as a normal retracement. That seems to be happening. Should it fail and close below $11, then $9.31 becomes a possibility. On the traders time frame, we can see nice little reaction, but suddenly some big strong volume selling yesterday or Friday should drive it down to $11.28 or $11.05 to test its metal. Underneath $11, run a mile. Notice how much volume has been increasing as it's been going down. Looking at the monthly chart on Linus, we can see that it's still got something. Whether it's going to $4.14 or going to $6.39 or $10.16 is determined by how long this base is, which is a very long sweeping base. So this eventually will go a lot higher. Full stop, new line. Stop loss should be at $2. Buy dips if you get them to $2.12. On the intermediate time frame, we're looking for $2.67 with not much fuss, and probably $2.79. Have a stop loss at $2.45 if you want a tight stop loss, or below $2.40 if you want a wider stop loss. On the traders time frame, we see $2.67 on the top side, and we look down to $2.48 lower if it breaks down below $2.56. Now, near maps on the investors time frame has come down further than it should have. So we might expect it back up to $3.60 maximum, but probably best seen as $3.17 target on this rally, full stop, new line. Currently, if long stop should be a close below $2.50, because if that gives away, expect $2. On the intermediate time frame, we see a little bit of a holding, so we think should it breach $2.76, look for $3.17, have a stop loss at $2.60 should you buy it. I'm sorry, the recording hasn't gone up. I think I put up the, let me know. Let me know, has there been a delay with the screen, or is it okay now? Has it been okay? Because I didn't have the other recording working, which is a bit annoying, and I'm sorry about that. On the trader's time frame, we see a look at $2.91 or $3.01 or $3.17 if it can get out of its own way. At the moment, just have a stop loss below $2.56. I don't see a reason to be exciting. We could see $2.91, but you need a stop loss below $2.55. OPT.ASX. So Sue, why were you asking about lithium stocks in particular, or was it just because you like to talk about Linus? Now, Opthia. This has been on a tear, up from $1 at its maximum to $4 $2.15 at its maximum. So it's kind of really been moving along nicely. So dips to buy, we probably seen down to $3.36. If it breaks $3.25, you could get a chance at $2.72, but I doubt it. Then look for $2.72 and $2.62. Okay, Sue's saying that Scott Morrison is wanting to put money into lithium companies to help with space development in USA. Oh, is that the NASA thing? Is that where he's putting his money in? Okay. Maybe he's just trying to hold up the lithium companies. Interesting. No, I didn't realize that was spending on companies rather than putting into NASA. That makes more sense than what I just heard on the press. Watching Donald Trump, he promotes businesses and he goes out and he'll promote Maria Bartoloma or he'll promote how good Fox News is. But if anybody's against him, he'll trash them. But if somebody is doing a good job and doing something, he'll actually praise them and he sings praises. He's very polarizing because he gives extreme commentary. These people are very bad. These people are the best in the whole world. Interesting approach, but certainly it certainly feels good when he's pumping things up, which he did for Scotty Morrison. Okay, so Opthia, at the moment, we've seen it pop up. I guess the real risk is break below $2.80 on the weekly charts. So if you're long, have a stop loss there. If you want to have a tighter stop loss, have a stop loss at $3.10. Opthia on the traders time frame probably deserves more time in the churn, but reality is you could look up towards about $3.90 before a challenge towards $4.24. The information technology companies index is at 1415, kind of a risky proposition. A break below 1367 would suggest 1305 or 1285. I think it's struggling. There is a missing small cap stock, I'm sorry. SLX.ASX, Silex. Silex is kind of had a nice retracement. So if you're buying this in the longer term, have a stop loss below 29 cents and hope for towards about 53 cents. On the intermediate time frame, have a look towards 46 cents and have a stop loss below 36 cents. On the trader's time frame, a break above 44 cents looks for a run all the way to 46 cents. So you'd have a stop loss below 38 cents. Top 100 stocks questions. Bruce, good look at charts. Thank you. Well spotted. WOW.ASX. On the investors time frame, as Bruce has so beautifully pointed out, it's now challenging the all-time high for Woolworths. So our friend and lover, Howard, is probably very happy because he would have held on through this entire fall and be rewarded, full stop, new line. Now, I don't own as many Woolworths as Howard would want, but I would be thinking now, should I get rid of some of these, question mark. The answer would be probably I should charge just as much as Howard does for his services, which is about $8,000 or $9,000. Then I'd be a lot less stressed about the expenses in this business, full stop, new line. But Howard can do that because Howard is Howard. $39 is probably still feasible. The best thing I would say is just to protect yourself to have a stop loss at $35.50 if you are buying this, full stop, new line. The weekly charts just show a 2-week dip, so we should be thinking about $38.21 or $38.83. If you are long, have a stop loss at $36. The daily charts had a little bit of a burst of energy, but you can see that it came back to where it normally should have been. At the moment, if you are long, have a stop loss at $37.03. And if you wanted to buy, you could probably buy with a dip at $37.27, targeting those higher levels all the way up to $39. Or .asx. I didn't realize that was top 200 or a Cobre. Investors time frame and inside month, things get better for this above $3, full stop, new line. Then you target $3.31. Things get better for Orocobre above $3, then you target $3.31 and $4.18 with a stop loss below $2.90. On the weekly charts, we see no volume spike on the weeklies, even though it's been rallying. So this isn't so good. At the moment, target $2.82 and $2.87. Your stop loss is best seen as being at $2.47. On the traders time frame, we see $2.81. Having a stop loss at $2.50 makes sense. Okay, that ends this part of the sojourn to date. We're going to go across to the PHG trades and we're going to pull out something and be hopeful. It's 10:30. I thought we were really cooking with gas before, but I must be blabbering on a lot. Best thing since sliced bread is as follows. Where's PHG trades? AMP, we're looking to buy at 170 with BHP, $37.40. I suspect this has been stopped out. Not quite. Let's raise the stop up to 37.50. Rio, we're still waiting. Telstra, we're looking for 347. I don't think we got that. I think we'll still wait. Now we're going down by 1%. This is in the big cap stocks. If you are thinking about doing something in the small petites, that's probably okay, just for a quick run. of course, now the Australian government, Scott Morrison is pursuing, and the other Liberal governments have been pursuing a high immigration policy while pretending not to. And now they're talking about higher unemployment rates. And it's be quite funny to see Australia paying for all these people who've come in expecting cheap jobs, and they're taking away jobs people over 45 used to work in because they're cheaper, obviously, because they're not 45 years old. And as a result, more people go on the dole, or whatever they call it, New Start, so the government doesn't pay them much, doesn't even pay them the amount of one night's allowance in Canberra in your property owned by your wife, if you're a politician. Ha ha ha. Nice guys. Let's get out of here and have some fun. Talk to you soon. We're going to be putting on a lot more trades on after the market falls, whenever that or wherever that comes down to. Have fun. Bye.